Hello and welcome to the Open Analytics End of Year Wrap. My name is Edward Weil, and today we'll be in conversation with the co-founders of Open Analytics, Bosko, Ilic, and James O'Donnell. Thanks for sharing your insights with us today. We'll be discussing 2025 in review and the predictions for next year. We'll have a Q&A at the end, so if you have any questions, throw them in the question box in your top right-hand side. And without further ado, let's just jump straight into it. All right. So looking back at the year, 2025 has been pretty eventful. We'll begin by looking at some of the predictions we made at the start of the year. So James, back in March, you hosted a webinar on the outlook for 2025. You made some bold predictions. So let's just revisit some of those now. On property secured lending, you said not anticipating any significant strength. First, property development loans are the exception. There are still some material losses to come here, though there are signs of improvement. So would you say that it's improved?
Yeah, thanks. I didn't know I was going to get held to account on all my forecasts. Yeah, on that, I mean, overall, I think it was a pretty good year. So on property, I think that prediction was largely right. So if you look at property secured lending, mortgage books, pretty good. So default rates tracking around sort of 80, 90 basis points. You can look at the data, that APRA produces. We look at our clients' data. So not really seeing much stress on mortgage books. If anything, the property development, there's been a bit of stress there, probably less than I would have thought. So yeah, we're tending, construction in general also, I think we've actually started to see insolvencies go down in the construction industry. So yeah, on property secured lending, generally pretty good.
Yeah. Well, that sounds good. So on unsecured consumer lending, you said inflation may need to stay low for several years for cost of living pressures to abate. Therefore, we're expecting lending to fund discretionary spending to experience higher than average loan arrears for some time to come. So how did that go this year?
Yeah, again, we're tending to see that probably the one area where default rates on loan books were a little bit higher. Probably not all unsecured lending. So things like credit cards holding up pretty well, but little small increases in 90-day rates, probably more your consumer SAC and MAC loans. So the general theme is across consumer and business. So some of the higher interest lending, understandably, given inflation and rate rises, we saw that's really the small sector where we saw a bit of stress. So.
And finally, on asset finance, you said in good shape for 2025. Good year expected ahead, depending on the industry. So were there any major incidents for asset finance over the year?
Yeah, so again, asset finance. So I was actually at the risk managers roundtable yesterday for asset finance. So talking to a lot of the asset finance lenders in the non-bank space. We actually have been reporting from our data pools how the asset finance default rates are looking, and they actually have been pretty flat for the last six to 9 months, actually. So again, I think largely right. The one thing we didn't predict was road transport, a little bit of a hotspot of risk within asset finance lending. So particularly for whatever reason, I don't know the reason, but in Victoria, actually funding sort of heavy trucks, prime movers, seeing quite a bit of stress on that, albeit on a pretty small subset of asset finance books. But generally, overall, asset finance, again, looking pretty good.
Would that be like projects working on major government constructions that would be experiencing this?
Well, the asset finance.
Yeah.
No, these are loans for typically smaller road transport. So generally, single truck operators is probably
right. Makes sense. Yeah. Okay. Well, yeah, those predictions were pretty accurate, I would say. We'll turn to you, Bosko. Were there any trends that surprised you this year?
Yeah, thanks, Ned. I suppose coming off the interest rate and inflation rate rises over 23 and 24, I was probably most surprised by how mild those impacts turned out to be over 25, but they're still not much time in 25, but we'll see how 26 goes.
And James,
Yeah, I'd second that. I mean, it might seem contradictory given the predictions, but if I just take the last 3 years, so looking back, it is a bit surprising that, particularly in business lending, it is surprising that insolvencies aren't higher and loan defaults. So if you look at insolvencies, they're a bit higher now, but there's just more businesses. So the rate of insolvencies is actually pretty close to a long-term average. Rate rise is probably less of an effect, but the inflation has been really bad. So yeah, in some sense, it would be reasonable to expect more stress in loan books than I've seen. So there is a bit of a surprise over the last few years, really.
Yeah, we'll move on to regulatory changes now. So we've had a few significant regulatory changes this year. We'll start with you, Bosko. Is there anything that stands out in regulation of the industry that you would say?
Sure. I think probably the most significant regulatory change for me would be APRA's announcement recently to create a pathway for mid-sized lenders to get IRB accredited. The impacts of that obviously are yet to come, but it will be very interesting to see, who goes for it and how they stack up against the big 4+2 that are already accredited.
Yeah, it will be interesting to see who actually goes for it. So,
and James, did you think there are any other?
Yeah, there's a few changes this year. Probably the big one, it's a change that's coming. It's probably in the world of private credit. So private credit has been growing over the years. It's still fairly small compared to, it's what's funding a lot of the non-bank lending that's out there. ASIC has done a big review of the industry. There's been a lot of consultation. So I think it's been made very clear there's regulation coming to look at really things around sort of more consistency in reporting, transparency, and a few other areas. So I think we're sort of predicting that regulation will probably come in next year. But I think the sort of private credit funds are sort of anticipating that and sort of already adjusting. Funnily enough, I think the effect will actually mean that private credit will grow further. So I think generally the operators, are pretty good. So I think once you get some more regulation, I actually think it'll make investors more confident. So I think the eventual effect will actually be more competition. So you'll actually see more growth outside of the major banks, particularly in business lending.
Yeah.
Probably one more worth noting is this year, of course, the buy now, pay later regulations came in, so more stricter responsible lending. Yes, that's significant, and it's very good for consumers. So protecting individuals for not getting too indebted. We didn't probably, on aggregate, probably didn't have a big effect on the industry, mainly because in anticipation of that regulation prior to that, we've actually seen a lot of lenders actually move away from that product anyway. So a lot of funders and lenders themselves, a lot of our customers actually discontinued their buy now, pay later products. So I think the effect, it's a big regulatory change, but probably had a smaller effect than on the market as a whole.
Yeah. Did you think buy now, pay later was a bit of a fad, or?
Oh, it's hard to say. I mean, it's still there, and there's still some notable large players. I think a lot of lenders actually struggle to make it profitable because it is targeting a higher risk demographic. So I don't know whether it's a fad. It's certainly reduced in its excitement amongst lenders.
Mm-hmm.
But just on the topic of private credit, we've seen a fair amount of turmoil in the US with the collapse of First Brands and Tricolor. Are you worried about private credit more broadly, and do you think we could see any knock-on effects in Australia?
Yeah, look, if I was talking, I would be worried if I was sort of operating in the US. So there actually has been some, bad behaviours. So particularly some of those really reminiscent of the subprime crisis. There really has been some subprime lending, some of the hallmarks of what you saw in mortgage lending, but really now in consumer auto. So the big ones you mentioned that, funds blown up. So pretty bad practices really. And now more recently, some issues with invoice finance lending. Am I worried about Australia? I think like we work with a number of the private credit funds, and I may be a bit biased, but I like to think I don't think there's as reckless behaviour happening here, and there is the spectre of regulation coming in. So I'm probably not expecting anything. There'll always be some pockets of high risk lending, probably in Australia more in the construction space than anywhere else. So I'm not expecting hidden, subprime lending to sort of appear in Australia. So probably not too worried.
All right. Well, we'll change gears now into tech, and AI and LLMs have largely overshadowed the tech news in 2025. With that in mind, Bosko, has the rise of large language models had any impact on the way we work in the industry?
The way we work, pardon me, the way we work, not really. So we largely build and automate our own workflows and build our own tools. We have used a few of these AI coding agents, trialed them out. They, are sort of limited value to us. They're reasonably good at like putting up a code scaffolding, that kind of thing, but we, I guess, haven't seen much success in the way of like them being helpful in terms of debugging code. That's still very much something that's probably where they could be the most used, but they just haven't been for us. So we'll see how it goes though, because obviously it's like a rapidly evolving industry.
So you're not ready to replace analysts with
nowhere
Bosko.
near it.
AI models.
Yeah, nowhere near it.
All right. And James, what are your thoughts on AI in general?
Yeah, it's something we're getting asked about constantly. It is sort of something that I've never seen something that's been hyped so much. So it's really hyped here. Boards of most companies are putting pressure on management to explore AI and large language models. To be honest, amongst our customers, we're actually seeing quite a high degree of sort of AI fatigue. So probably some people have probably in some sense had have run a lot of pilots. Probably most of our customers have done something with LLMs. At this stage, I think the jury's still out. I think despite all those, lots of pilots and even a few things we've seen go live, we haven't seen any of our customers turn LLMs into dollars. So I think my general take at the moment is the models aren't good enough to really sort of, automate things completely or replace people. So the useful tools, a lot of our team use the tools for, play around with them, but I'm certainly not seeing something that can actively sort of replace roles.
Yeah. At best, they'll just speed up a few basic tasks that we do, but they're not replacing anything.
And my theory, if I get a 5% efficiency gain, I might fill that time or something else. So we're not seeing it in, we're not seeing sort of roles replaced with some of the really hyped up talk. The other big factor I think contributes to some of the fatigue out there is a lot of marketing or slapping the AI badge on things that aren't large language models, and they're really rebranding old technologies as AI. So there's sort of a lot of products out there that people are getting pitched at them will call themselves AI, but it's more really traditional stuff that's been around 20 plus years. So jury's still out. So I think by the end of next year, we'll have, if there was going to be some really good money-making use cases, surely they'll be in by sort of next year. So I think next year might be a bit of a crunch year for businesses actually starting to make a go, no-go decision on doing anything significant with large language models.
All right. Well, given that, we'll move away from AI. Have there been any technical tools that we have been using this year that you think have been helpful?
Sure. There's this JavaScript library called iCharts. Really nice, little that little anymore, but nice slick library for visualizations. Pretty easy to use, great documentation. Most people would have seen a chart built by High Charts somewhere on some website. I know ABS uses them. A number of news outlets use them. So if you've ever seen like a nice looking chart and are wondering where it came from, maybe have a look at High Charts. It has a certain unique look to it. So once you see it, you won't be able to unsee it. And yeah, if you're interested, check out High Charts. It's a good little JavaScript package.
So it's not an open source tool. So
you do it for personal use, it's free, but for commercial use, they do have a small fee.
sounds interesting. All right. Well, yeah, we'll move on to Open Analytics as an organization. So, Bosko, what do you think were our biggest successes this year?
Biggest successes. So at the start of 25, we had a number of people who were growing their families, myself included.
A lot of Open Analytics babies.
Yeah, a lot of Open Analytics babies. Yeah. And you know, for a company of our size, when a good chunk of us all goes on parental leave, we weren't really sure how that would you know, what kind of impact that would have on the business. And it turned out everything ran very smoothly. So that was a big success as far as I'm concerned. No more babies for me.
What about you, James? Any highlight?
Highlights for this year, probably one on the work side. Yeah, about 2 years ago, we started released a product where we effectively host lenders' IFRS 9 models and portfolio monitoring, our CPM product. So the product's been around about 2 years, but this year it really grew. So that's probably the highlight for me, just the number of typically non-bank lenders and second-tier banks that we've sort of signed up for that product. And it's been really going really well. More on the team side, I have to call out Dennis from our team, bit of a budding runner. He actually cracked the 3-hour marathon. So anyone out there is into running know how difficult that is. So, and also he just turned 40 this year as well, I think. So, you know, to crack 3-hour marathon at 40, I think is pretty inspiring. So,
I think he said he was going to do it again.
I think he's doing 3 more this year, actually. He told me earlier today.
3 more this year?
Yeah.
Well,
Next year,
Next
sorry,
year.
2026.
Yeah.
Talking about 2026, the year ahead. So, we'll take a look at the upcoming year. So, are there any specific predictions you wanted to make, James?
No, more predictions. I'm always been asked for predictions. One I've already talked about. So I think expect ASIC to release some regulations for private credit. I think coupled with that, I think you'll see the biggest year of growth in non-bank lending and private credit next year. So that's probably the one key prediction. Maybe one that's a bit more out there. We talked about AI. Like I said, I think next year there'll be a bit of a reckoning for AI because people have actually been trying to use it for quite a while now. I think there's some good chance the AI bubble that, you know, in terms of stock values that's been in the media a lot, there's been a sort of question when that's going to burst. I think it'll be towards the end of next year. Bit speculative, may or may not come true. It's hard to tell. But I think some overvalued stocks and overinvestment in data centers, unless there really is a big breakthrough imminently, I think there's going to be some challenges there in the US.
And is there anything else that is worrying you about or seems worrying you about?
Yeah, so locally, I think the thing that's sort of worrying / maybe annoying is kind of inflation tick back, because inflation, particularly for businesses, you know, probably one of the economic indicators that has the biggest effect. Particularly, we've seen hospitality really is in a downturn right now. So I think persistent inflation had ticked back up. You know, it's sort of back over 3%, 3.8 or something. And it sort of appears when it went into the 2s, it was a bit artificial. It was sort of the government subsidising people's power bills. So it is, yeah, inflation, I think, is still the biggest problem that we've got in Australia. And don't ask me for a prediction on where that will go, but I was talking to an economist yesterday, Credit Watch's economist Ivan Colquhoun, and his sort of view is that it probably will be a bit sticky. And then I guess again the AI bubble bursting, if that happens, who knows the effect? But yeah, if it's a big effect, that could flow on, could hurt America, and when America has downturns, it tends to affect the rest of the world. So probably not so worried about that second one. But yeah, the inflation is probably the one to watch out for.
So we'll try to wrap up on a more positive note. Is there anything you're optimistic about for 2026?
Probably nothing specific, but I'd say I'm just generally optimistic about Australia and Australian credit portfolios. I think one of the key things is that our unemployment rate is still very, very low. So we've basically got full employment in the country. And it's generally hard to have, if you look at global data, it's really hard to have significant stress in the economy or in loan books while unemployment rate's low. So I think next year might be, again, a pretty good year for credit portfolios. It might be a year with a bit of cost pressures and weaker GDP like this year. But I think in general, it's the most likely outcome when we're sitting here end of next year is that credit portfolios have performed pretty well.
As normal.
Yeah.
Nice. Well, so we'll be taking audience questions shortly. So if you have any questions, put them in the box in the top right, and we'll take a look. But before we do that, we'll just cover off. Do you guys have any big plans for the holiday season? Bosko?
No real big plans. We'll just stick around Sydney. Have spend time with family, friends, lots of food, put on a few kilos.
That's pretty good, James.
I'm going to Bermagui of all places. So my partner's dad lives down there, so we've never been there before. So far, New South Wales, okay. Far south coast is probably close to the border of Victoria. Never been there, so going there for about a week over Christmas. And then I'm actually, for a change, going to spend most of the summer in Sydney. Watch some cricket, watch Australia continue to obliterate England in the Ashes, and
nice.
Relax.
All right. Well, we've had a couple of questions from the audience. So the first one, so as the founders of an Open Analytics, what are some of the most valuable lessons you've learned since you?
Oh, it's a tricky one.
Yeah.
For me, you can get.
Oh, sure. The one that always sort of sticks out to me is that it's much better to do something right than quickly. So I think always taking the time to put your best work forward is more valuable than doing something as quickly as you can. Yeah, it's probably a lesson that'll stay true for as long as I'm alive.
Yeah, that's a good.
For me on that one, probably I've been thinking a lot about running a small business. It's probably getting the balance right. So remembering to prioritize your mental and physical health is more important than anything to do with work. So just that balance, both as a business owner running a business, it's easy to get obsessed when you're running a business, but sort of prioritizing your family and health. And that's, goes for us and employers as well. Yeah. I think since COVID, we've learned a lot about, flexible working arrangements, and I think it's been a great change. It's actually changed for the good, sort of allowing more flexible work arrangements.
I guess really when you're running a business, you're running to the beat of your own drum. So you learn a lot.
You can overwork. Don't work every weekend and things like that.
Yeah. So I've got one final one. So looking ahead, say 3 to 5 years, where would you say the biggest growth opportunities and for diversification?
I might sound like a broken record on this, but again, I mean, I'll probably mention the world of private credit and non-bank lending. So Open Analytics, when we started, we were doing most of our work with major banks, doing IRB models and credit models. I think private credit is now fairly small part of the economy, but it's growing. In other overseas, it's a much bigger part of the landscape of finance, particularly for business. Like in the US, I think it's around half of lending actually comes outside of the banking sector. I don't know if Australia will go that far, but I think we're very much sort of leaning into the world of private credit because we can see that area is growing, and it probably needs help from companies like ours who focus on credit risk. So yeah, I think that's probably the biggest opportunity, both for us, but then I think it's good for business as well. More competition, access to more credit and finance particularly for startups as well.
Did you have anything?
Just echo all of that.
Yeah, we do have one more from the audience. So we're wrapping up. So, which industries would you say the biggest ROI from AI-driven data?
Gosh, that's a hard one. I think I can sort of answer that. Where we've seen the biggest impact is actually in things like marketing and advertising. So that's sort of one area where there is reasonable take up. So writing things like ads and that might seem like a small thing, but a campaign manager would often sort of farm out writing promotional material and product, for new products. So that's probably the biggest one. One small area I've seen I'm not sure how far I'll go, sort of in legal document reviews. So checking for things in contracts. I've seen a few cool sort of tools around that, but it's really hard to predict. So anything to do with writing and creative, I think it's more likely to be that creative areas than things like financial services. I mean, the few big trials in financial services have been public. Actually, I won't go into them, but actually have been stuff really. So probably more creative. Journalism, marketing, that sort of thing is probably the biggest area, I think.
Nothing bad.
I think it's exactly right.
Well, good. Well, thanks everybody for attending today. Thanks, Bosko, James, for your insights. And I think I can speak for everybody at Open Analytics. It's been a great year, and it's been great to be along for the ride. To everybody online, this will be the last webinar of the year, but we should start the series again in the new year, so keep your eyes peeled on your inbox, and follow us on LinkedIn and reach out if you have any questions, and be in touch. So safe holidays, and hopefully see everybody in the new year.
Thanks, Ned. Have a great Christmas, everyone. Have a good new year.